Expectations that the Federal Reserve will agree to cut interest rates tomorrow also supporting that and other commodities prices today. There's also some chatter about Iran and crude options expiration. Several investment houses are raising their forecasts on oil. Goldman Sachs putting an $85 crude oil price target by year's end. CNBC said that prices could hit $100 a barrel by the end of 2008. Higher oil prices are a big worry for former Federal Reserve Chairman Alan Greenspan. He spent a portion in his memoir, The Age of Turbulence, making some explosive charges about the motives for the war in Iraq. Here's what he told me. What is this war about?
What it was about is I was always of the opinion that Saddam Hussein was on a very dangerous path. You could watch what he was doing in the 30 years. He was confronting Iran, then invaded Kuwait, was threatening Saudi Arabia, and it was very evident to me that his goal was the Straits of Hormuz, which is where 17, 18, 19 million barrels a day of the world's crude oil goes out to the markets. Anyone who controls the Straits of Hormuz can shut down the industrial structure of the West. And I always was very much concerned about that. My view was taking out Saddam Hussein was a very important thing. So my view of the war was, yes, it was about oil. And I thought that there were weapons of mass destruction, and Hussein was behaving as though they were. And,
meanwhile, here we are with $80 a barrel oil. Doesn't that concern you?
Yeah, of course it does. And it's precisely for that reason that it was important to get him out. I was never of the opinion that the reason should be weapons of mass destruction, and more importantly, I had no reason to disbelieve that that indeed was our official motive and the reason why we went to war. But I never thought that was a terribly critical issue. But I applauded taking Saddam out. I thought it was a very important issue. And this problem still exists.
And joining me now with reaction to Chairman Greenspan's view on the Iraq War as it relates to oil and the current market, I'm joined in the studio by Daniel Yergin, Chairman of Cambridge Energy Research Associates, and a CNBC Global Energy Analyst. Nice to have you with us, Dan.
Thank you.
So what are your thoughts on what he had to say?
Well, he didn't mince any words, but I think what he was saying is that if it's indeed about oil, but about preserving the security of the Gulf and the concern that Saddam Hussein, in one way or the other, was going to try and dominate it with what that would mean for the world economy. And in his mind, it looks like the first and second Gulf Wars are really part of the same conflict.
Based on the supply of oil today around the world, is $80, 57 cents a barrel justified?
I don't think so. Not on the physical fundamentals today. They are if you have expectations, as we saw the French foreign minister on the weekend talking about possibility of war with Iran. You think other things like that are going to happen. The market's tight, but the physical doesn't support it. Next year it looks a little better, unless you have a political event or you have hurricanes and other things like that.
Do you think we will have a war with Iran? What are your thoughts on this chatter today?
Well, I think that this is going to go up and down, and that probably there's not going to be any resolution until after 2009, until there's a new administration in Iran and a new administration in the United States, if there is a resolution. But it looks to me like, although there's some discussion between the U.S. and Iran going on, the two countries and others are going right by each other. And now the French are very strong about this as well.
So sort of the upset is building.
Well, it is. I mean, this is the one thing that's there, and it's just going to be there for a couple of years.
Let's talk about alternative energy sources. With oil above $80 a barrel, you have to believe that the push toward alternatives will only increase, correct?
It's everywhere. I just came back from China, where it's a week there, and they're looking at all the different alternatives.
Well, they've got to. I mean, the air there is awful.
Yeah, exactly.
They've got to find...
And I think the change is that the Chinese have really waken up and said they really are going to deal with their environmental issues, and that also means decentralizing or changing the nature of their energy system. They can't depend on coal pull to the degree that they do.
So in your view, what is the most viable alternative to crude?
I don't think there is a single thing out there. I think energy efficiency is going to be a big one. I think clearly what happens with batteries, with hybrids or plug-in hybrids, those are the factors out there. And of course, the thing to watch is what kind of breakthrough there's going to be in terms of biology that would really give cellulosic or some other ability to make fuel out of plants.
Mm-hmm. So you've got oil at $80. You say it's really not warranted when you look at pure fundamentals, and yet that's where it is. And
that shows you where people's minds are.
Fear.
Yes, fear. And this is a price that could go up on fear.
And so what would your projection be for crude oil, say, by the end of the year?
Well, I think it's a very tight market. We could easily see $85 in this kind of market, or it going up further. I think it's next year when you see the buildup of supply that seems to be in the cards. Also, the other thing, Maria, that people haven't focused on that really overhangs the market is that costs have gone up so dramatically that projects of all kinds are being postponed, whether you're talking about drilling oil deals, whether you're talking about LNG. So everything is taking slower for market to respond to these prices.
Well, the other issue is, as far as the access to oil around the world, you've got countries that are really playing hostile in some regard, adding different taxes, adding, more difficulties, certainly for America, to get that oil.
Yeah, the two biggest problems for the international oil industry today, one are these rising costs. The other is exactly what you said, access. That when prices are high, governments don't feel any urgency about bringing in investment and encouraging new development. And therefore, if you're a company that wants to invest, it's tough. Either the terms are very harsh or they're not there at all.
And the market doesn't believe it, because the market is basically not even trading on OPEC, saying, they're going to put more oil into the market. Dan, good to have you with us.
Thank you.
Thanks very much.